I don't really want to look at this. We can start fresh on Aussie, Aussie US. So it's my first ever time doing this in terms of trying to get other people to understand it how I see it and understand how I view the markets and stuff like that. So we're gonna just take an attempt at this and see where it goes from there. So I already charted up these pairs. I mean, this is probably some of the most important ones that I like to look at. Dollar, yen, Swiss franc, dollar, yen. I meant yen is in the index, but anyway, we'll get to that. As you can see, just on an uproar, especially on the weekly, just keeps going up and up and up. But anyway, we'll start here on Aussie or whatever you want to call it, AUDUSD, whatever you want to call it. I like calling it Aussie just because it's one word, simple. And anyway, so clear cut structure. This is last week's analysis because I haven't done it yet. We're gonna do that right now. So last week's analysis, you can see high and the low breached. So anyway, going to daily. You can see a thing right here is Monday. So Monday it opened up. Monday cracked open. It retested this box. Retested the highs almost of Friday, and then it came back up. Boom, and it closed right here. Had a closure of I think it was like 66.50 if I'm not mistaken. Yeah, 66.50 it closed around, which is a pretty even number. Aussie likes that number, as you can see. It loves that number. It's been around this number for quite a while. It loves 66. I don't know why, but just loves it. But as you can see, I was going to take a position on this around Tuesday when I had a position on USD Swiss franc. I had a position down here at 89.5, which is right here, 89.50, and I took it all the way up and took profit around here, 90.50. It's like around 100 pips, nothing crazy, clean cut structure. But here, you can see it opened up Monday, right? You can see at the bottom. Look at the bottom right around here to see like what day it is. So Monday, so right here, Monday closed at 5 o'clock. It was at this box, and now we could have taken a position, something like this, taking a position, put stops above these highs or even above this high, because that was I think Sunday's high. So right above Sunday's high, even if we go down on the 2 hour, right here was Sunday's high. We could have just put stops, a little bit above there, 66.70, and took it all the way down. This would have been first target, and then I drew this on later on, but this was the first target overall. So that would have been even a 4-to-1 risk to reward. So, I mean, that would have been, good, like a good trade, yeah, easy. But as you can see, it cracked lower. It cracked, like, what is that, another 70 pips lower. So, we could have just rolled, at that point, we would have just rolled stops and let the trade run, which is what I did on Swiss franc. I wish I didn't chart it up yesterday, but this is for this week's analysis. This is where I think it's going to happen this week. I put this here just as a basis to see it. I mean, I see it already, but this is for, like, the people that are new to it or haven't really been in the forex game that much. But I mean, even so, this isn't for people that are new to forex trying to learn, because I'm not really going to go into the I'm not really going to delve into the the fundamentals of forex and what this does with that, and I'm not on that. This is for really more so for my psychology and to help people understand what I see and how I see it. But anyway, like it would look something like this, a potential forecast for next week, something like that. And I put this data range on there just easier because the forecast really makes stuff clustered and all that. But this is pretty much clean cut. I have two alerts set, one here, I think 90.43, and one more at this daily low, which I'm pretty sure that's Tuesday's daily low, Thursday's daily low. My fault, Thursday's. And then it comes up. So we could get something like that, a drop lower, and then the push up. But we'll see come tomorrow, Sunday into Monday. Well, not Monday because it's Memorial Day, but hopefully Monday into Tuesday or something like that. But anyway, as you can see, in Aussie was clear cut. We could have taken a position from here and carried it all the way down, which would have been about 150 pips, 140 pips, which if you have proper risk management, that's not I'm not going to say that it's easy to do, but it would have been clear cut and simple, really. But anyway, what we're going to do is we're going to clear all this, and we're going to start fresh. So this is what I like to do. I like to start on the 2 week, really. I like to start on the 2 week. I like to use EMAs to really, see where the trend is, see where the trends are going. And as you can see, on the 20 and 52 weeks, it's on a crazy downtrend. It just broke away from the 20 EMA. So next target would potentially be down here, 61 flat, but that's 400 pips. We're not really gonna. I'm not forecasting 400, 300 pips. I'm not really doing that. I'm more so looking at intra weekly to intraday trades. You know, 2, 3, 4 days. Like is how I like to carry a trade, depending on the setup, of course. But last week I carried this Swiss franc position from I'm pretty sure it was like Monday all the way to Friday. Like from right here Monday, yeah. So London switch over Monday. I carried it all the way to Friday, right around here. I took profit around here. So 4 or 5 days open. Nothing really too hard to see, but I like to start top down from 2 weekly, from the 2 weekly time frame, 2 week time frame, and as you can see, it's on a downtrend for both. And then I like to go on the weekly, you know, get everything same thing, downtrend, we're good. And then instead of jumping from the weekly to the daily, I like to check the 3 day. 3 days, like, it gives you a basis to how half the week is going out so far. So as you can see, I mean, it's on downtrend on every single time frame, really. And then we check the daily. It's on a downtrend on every single target. So number one, the first thing we'll be doing is looking to sell, not looking to buy, not looking to take a position here and carry it up. We're not trying to do that because, you know, you're trying to catch a falling knife. That's just idiotic, number one. And number two, it's just, you know, not something you can do for proper risk management. So hold on, let me just move this here, get it nice and even. So start at the weekly. We take I like to take the horizontal ray. I mean, whatever you guys like to use is what you like to use. I like to do very, very clean cut and precise. I like to take up here. You can see the high, the weekly high, and that's what I use. I don't use, you know, oh, it's somewhere around there. I like to use the clean cut price, like whatever the price is. That's what I use. So we take that high, which is what, 66,678, and we put that, and I mean, right, simple as that. And then we take the low, same thing, 64,904. Take the low, 904. And then on the daily, it's gonna look very like, it might look, to me it looks clean cut, and I can already see where I might take a position, look for a position at. But for the people that are new to this, or new to how I view the markets, because I mean that's really what it is, it would be a little challenging to see at first. So we can go down to like the 4 hour, and now we have like a little, from this high and this low, we can see like a little range that the market is in. Evidently, that's what I like to, you know, how I like to see it. So we take that range and we look for a place where hold on, let me get a highlighter tool, where the market can evidently from here come up, you know, like bottom out, do what it's gonna do, and then go lower, you know. And I mean, that's on a perfect, you know, setup and a perfect day, like that's what the market would do. It would just come up for you to take a position here and then drag it lower. But it might come up, you know, there's a lot of things the market can do, evidently. But what I like to do, I keep saying what I like to do is not react. I let the market do what it does, and I react to that. You know, yeah, I have analysis for what the week might do and all that kind of things, but I more so let the market do what it does, and I react to that. So like come Monday or Tuesday, I'm just making this, you know, I'm making it not look better, but I'm just making it more precise, making it more clean. See, from that low, instead of it being all the way over here, I just like to, you know what I'm saying, make it clean cut. So what I like to do from there is I have the weekly high and low set, and then I like to use the prior weekly. I could use this low, but I like to use the prior weekly low just as like a basis to where, well, if it comes there, I know definitely to look for a short. So I like to which is what, 66,050, 1, 2, 3. And then now, as we can see, now we have a basis. Okay, boom. So now if it comes up, hold on, let me get, what's the highlighter at? I think it's right here, yeah. So if it comes up to here, I know to take a sell, look for a position here, look for a short here, something like that. You know, put stops like somewhat close, because evidently it's the prior weekly low. So if we're wrong from here, I'm willing to be wrong from here, because it's just the prior weekly high and low is something of significance, because these charts, these time frames are the main time frames that matter most. You know, like, yeah, you have the 4 hour and the 2 hour and stuff, but this is where a lot of the manipulation comes in, and a lot of the second guessing yourself comes in. But if you can chart it up on the daily, and if you can chart it up on the weekly to where you think it'll go, and you have the proper psychology to carry the trade from, Monday to Tuesday to Wednesday to Thursday, instead of 4-hour snippets in between those days, then that's when you'll see the best risk to reward, and that's when you'll see the best positions coming in. So that's what I like to do. I like to use the prior weekly highs and lows as a basis for where the market can go to, and then I crack down on the lower time frames. So then from here we have the dailies, right? This is Wednesday, Thursday, and then Friday. It's made not the reversal, but Friday kind of like bottomed out, right? So then I like to take the arrow or the ray, either one. I mean, it's up to you at this point what you want to do for your charts and all that. But like I said, I like everything to be precise, clean cut. So 65,444. That's where we're going to see like a break above. You see how ugly that looks? Like, oh man, my OCD's kicking in, or whatever you want to call it. But I just like things to be precise, And then I put it to Monday's close, which is at 17, which is basically 5 p.m. That's when the market closes on every day. So for me, I'm on the East Coast, so Eastern time is going to be a little different. But this is Friday's high, right? So that now we know when the market gets above here, it's probably going to go up, yes, and that's probably where we're going to find the best place to short it. I mean, because evidently, you might see this and, I'll take a short here and wait for it to get down, but the market isn't going to do that. The market is going to, it's going to go up, entice people to get long. Okay, it's going up. Okay, let me take a long. And then that's when the position is going to start to roll over. And that's when you're going to see it break up to break down. And then, it's just, you have to understand the market on a deeper level, not just what the charts say, but what the charts mean in people's brains. You understand? Like, people seen this right here, and they said, we seen this candle. It came up. It's a bullish engulfing, or whatever you want to call it. And, okay, let's take buys. And then what happened? It made this higher low right here, came boom, higher low, another higher low, and then it dropped, 100 pips. And then people go, but I was long. Why did it go up? Blah, 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 blah. It's about psychology, and that's the deeper understanding of the market. It's psychology. But as you can see, hold on, I gotta move this over here because it's messing with my OCD. So we're just gonna put this 66.05, go up 2 more, okay. So above here, we'll be looking for not buys, but we'll be looking for prime areas to short. So we could I like to use the intraday targets. So you can see it's a red line. I like to use that for where I think the market is going to go. And it's pretty simple. I mean, for me, it's simple. How I see the market right now is pretty simple. What we'll do is what I'm looking at is the market to open up around here. Push up. Probably get something like that. Hold on, I think I can. Hold on. Is there a way I could make this smaller? Like, it's too thick. No, like it's too thick of a line. You know what I mean? But I think you guys will get the gist. Whoever watches this, I could use the brush. I'm pretty sure. Yeah, we could do something like this, and then we could just thicken it. Okay, cool. So the market's going to open up around here. It's going to open up. It's probably going to come down, and entice people long right here, and then come up to this area, around here, somewhere in this area. And then from here is where I will be looking for prime short positions, whether that be to put the stop loss at the prior weekly low, to put it a little bit above, and then we're obviously going to be targeting these lows, and we'll have a target down here, and which we'll get from the daily, basically from all the way over here back 2-3 years ago. But that's jumping the gun. We don't want to do that just yet. We want to take things clear cut, try to explain it the best way I can. It's kind of hard too, because I have to understand people aren't going to see the things I see. And hold on, I just got to make all the lines precise. Like, I don't know what it is, but something in my brain that just says, all right, make these things precise. And then we want to get to this one real quick. But, it's even easier to tell, like, it's easier, not easier, but it's better to chart up, like, let's say the dollar. It's better to chart up the dollar, see where the dollar is going to go, and then how to mitigate the risk on whether it be, Swiss franc, USD CAD, dollar yen, Aussie, euro, like even euro, a position on euro, like as you can see, it's just, very clean cut. Let me see, NZD, USD, Kiwi. It's all these things that are dollar crosses that if you know where the dollar is going, like even pound, let's see pound. I'm pretty sure, yeah, see even pound is pretty, not easy to see, but pretty clean cut, simple structure. So if you can understand where the dollar is going, you can understand basically where the whole market is going to go, if that makes sense. So anyway, back to Aussie. This is a clean cut structure, and what I like to do is when it's a line, it doesn't really tell you, price. So I just like to put the price there, which is 0.65444, and then it comes up right there. It just makes it look better, makes it look more neat. Evidently, is what I like to call it. So that's on the daily time frame. I mean, we could put I don't know how to explain it. I'm trying my best. I'm trying to, choose my words wisely, if that makes sense. But anyway, what we could do is start looking for the target down now. We have the target going up. So now if the market was to break up, right? Overall it's in a downtrend, as you can see. However, but it's not going to just move. It's not going to move, okay, down and then up here and then down again. It can, like there's always that in the back of your mind that it can do that because the market does what the market wants to do, and we are just spectators of that. But I would bet more so on the market not doing that, and the market, coming down, right, breaking these lows, coming up to, come back for these stop losses and these evidently enticing people long is what it's going to try to do. And then break lower, break this weekly low, and look for a target down low now, because this is the target up. 65.74 is the target to where, if the market breaks up, that's where we're looking at to take a short from, around this area right here. So it can be this area or this area, which is 30 pip box or 30 pip level, but we're more so looking at this position. So what I would like to do is add a chart, add an alert on the chart, check chart around this area, boom boom boom, and I think we have 2 alerts set already. I have 4 alerts set. So dollar yen, 2 on Swiss franc, and 1 on Aussie now. And that's if it comes up to this area. It might not. It can. I don't know what the market is gonna do. I'm just a spectator of what the market does, and then I react to that. So we take it from here, and what I can see now is I can see a line, right? I can see a line in the sand where the market potentially could go short from, rather than breaking up to that 65.74 level. We could get something like this. Just make this a little bit more even, and down to the 15-minute. Move this over. We could get something like this, rather than a break all the way up, which is what, like 60 pips up. We could get something like this to where it doesn't break this box. Like I said, I like to make things even numbers. It just makes it better in my brain, understand it better. We could get something like this completely to where it doesn't come up. It breaks above here. It tries to break, and then it just drops lower. We could get something like that. I mean, I'm not going to say for sure or for certain that it'll open up and break these highs and then come up here. That would be the perfect entry, or like the most precise entry, but that's not overall what it's gonna do every single time. So what we want to do is just mitigate what we can do. So even mitigate the risk is what I meant to say. So what we can do is we can even add an alert here on this arrow, which is the daily, which is Friday's high. So now I know that if price touches this area, right, and we're going to delete this one. Now I know that if price touches this area, I already know to look at the chart and see, and wait for the structure that tells me to go short, right? Because evidently what I'm looking for is a break of this high, entice people long, a break down, a break up to make that higher low, but it doesn't break that high, and then drops lower. It sounds like a lot, and it sounds confusing, but when you've been I've been trading forex for going on almost 4 years, basically. So it's been about 3.5, I think like 3 years and 6 months, 5 months, something like that. And the charts is repetition. You get on the chart and you do it for so long, it's repetition. You'll start to see things that happened before, and it's just that's really all it is. And the one thing that matters most is psychology. Psychology to hold the trade, psychology to know what the market is doing, and psychology number one to be true to your analysis and trust your analysis. Excuse me. So that's really what I mean. Now we're pretty much done. I mean, but I think the next thing we have to do is figure out a target for when it breaks that weekly low. So we can go to the left. We can look over left, and what I like to do is look for a high, like a previous high or a previous low that's like very prominent. So as you can see right here is 64.90. So what I like to do is look for another high below 64.90 that is pretty. Oh, right here, boom, I found it. You see this wick and how it lines up with this other wick. That seems like a pretty good area. That even if we were going to go on the line chart right here, and if we were to go on the 4 hour and the 2 hour, we would see it better. But I mean, like I said, when you're doing it for going on 3 years, almost 4 years, it's just easy to spot, easy to see. So what I would do is right here, 64.507. That would be my first target lower. If it were to break lower, which is 40 pips from the weekly low, which is fine. If you have a good risk to reward. Like I said, if we take a position from around here, that's 100 pips. 100 pips down, 120 from this line, almost 100 from this line, so basically 90 or so. But that would be the first target down, and that's pretty much what I like to do. I don't like to, put a whole bunch of lines on the chart. Simplicity is key, especially in this game. And by game, I mean forex. It's better to keep things simple rather than, have analysis paralysis and think, oh, well, what if it goes here and there and there and there, I like to just have lines on the chart, know where it's gonna go basically, and whatever happens, and that looks pretty good to me. It might not look good to you. It might look like what is this guy talking about, or whatever the case. But for me, it looks pretty simple, clear cut price action. And then, well, I keep doing that. What we'll do is we'll take a forecast, and ideally we would put it here, and then shankies. We would target. Why is it doing that? We would target like down here, which is 90 pips. But if you want to really get nitty gritty, we could put it 60, 65, 74, and then target down here. So that's 120 pips, like I said before. Which that's ideally, for some people that's their week right there. For me it could be my week with like a 1 lot or a 2 lot or a 3 lot, whatever you want to trade. But it really matters about the setups, and I have all these pairs to look at all the way down to pound. Not mainly because I trade all of them, but these are the ones I just like to look at because, like I said, it's just easy to spot. Like if there's not a position or a setup on one pair, I know one of these pairs is going to be a setup. And as you can see, consolidation box, look how long it's consolidated. Just Kiwi got wrecked. It's just a lot of things, a lot of setups that I see just by looking at it that I could have taken last week, but I didn't because of I was in that one position, Swiss franc. So no, it's nothing too crazy. But what we'll do is we'll take Aussie and we'll run with that. This will be probably the first pair that I'll look at and I'll stop with, because I'm not gonna sit here and go through all these pairs with you and watch do the same analysis I just did on Aussie and all of them. Some of them get deeper. I dive deeper into them, such as Aussie yen or whatever. But for now, I think that's a good place to stop. AUDUSD, a nice clean cut structure. High and low downtrend. Wait for the retrace in the downtrend, consolidation a little bit, and then the drop lower. So like I said, I have an alert set on this on Friday's high, on Friday's high, and then we'll just see where it goes from there. So it was nice to chart this one up and do it with myself recording it and myself speaking about it, because in my head it makes me understand it better. So we'll just go from there. So if whoever's watching, thank you for watching. Stay in tune. I'm going to be dropping more videos like this, and a deeper analysis, especially over the week as the market is open. Now it's Saturday, 3 p.m. Saturday. I'm just charting it up, trying to figure out where certain pairs are going to go for the week and what to have my eye on. So like I said, thank you. And it was fun.